Hi everyone, welcome to Trading in Zone. So today we will continue the series on our multiple price action trading methods which we have been watching. So we started with the basics just to give a review in terms of what a candlestick is, how a candlestick is formed, and how a candlestick is looked at, and what is a bearish signal, what is a bullish signal, and how and when the price moves up the candlestick forms, and how the candlestick forms when the price moves down. So that's what I refer to as bearish and bullish. So continuing further from where we left off, we also looked at what are reversal patterns and how we need to look at reversal patterns. And from there, one of the first reversal pattern which we looked at was, obviously, we looked at the hammer and the hanging man, and we looked at what they mean and how we can interpret them when we are trying to take trades. Thumb rules, do not forget, we will always refer to these patterns on the longest of the time frame what we get to see, which is typically a daily chart or a weekly chart, and nothing lesser than that I would ideally recommend you all to look at. Okay, so let's have a quick look at the reversal patterns what we saw. So I was just looking at the crude oil chart, and I thought, this is a great example before we go to the engulfing, which is technically today's chapter to talk about. So before going there, I thought it is a great idea for us to look at what these patterns are, and how we can identify them before really getting into any other patterns as such. So what did we look at? We looked at hanging man pattern. So we said that usually this is how it occurs. Double the size is the wick and the body is a small one. Upper shadow or the upper wick should be very small in nature, and usually that becomes a top. Not necessarily a reverse in pattern, but that can become a point of resistance, and the price might go down from there if we look at hanging mans. And then we also said that we can look at certain pin bars where we have a very small body, and the wick or the shadow at the bottom size is twice the size of the body, or very long in nature. So even these patterns become pretty evident, and the next day the behavior kind of confirms whether the price is going to move up or the price is going to reverse down. So we looked at a couple of these patterns. So you can look at pin bar patterns or the hammer patterns appearing at multiple places. The red or green really does not matter how it reverses. So that's a quick revision of what we were looking at. So let's move on to today's topic, which is engulfing pattern. After the hammer and hanging man are individual candlesticks lines, as previously what we have discussed. What we can see is that they do send important signals about the market's health and how and what the direction of the market is. Most candlestick signals, however, are based on combination of individual candlesticks, and sometimes it could be two candlesticks, sometimes it could be a combination of three candlesticks as well. So engulfing is one of these first type of candlestick patterns which involves more than one candlestick to start with. All right, like how we looked at a hammer and a hanging man as a single candlestick pattern, here we are looking at engulfing as a dual candlestick pattern. Before we really get into engulfing pattern, let me tell you that there are two types of engulfing patterns which we look at, which is typically known as a bullish engulfing and a bearish engulfing. The bullish engulfing pattern usually appears when the market is in a downtrend. Then a bullish big body of a candle wraps around or engulfs the previous day red candle. Okay, so engulfing is technically wrapping around, or it completely covers the body. Okay, this shows the buying pressure has overwhelmed the selling pressure. So that kind of confirms that buyers are in control when compared to the sellers in the market. Okay, and then the stock accordingly starts moving in the opposite direction. And something very similar happens on a bearish engulfing. Here the market is trending higher, the market starts moving upwards, and as the market starts moving upward, you will start seeing a bearish engulfing which might appear. I've just given an example right over here, but we will discuss more in detail as we go further. Alright, so what's very important here is that there are three criteria for a engulfing pattern to happen. So they are very important that we understand what are these three criteria. So the market needs to be, alright, rule number one or the criteria number one. These are kind of thumb rules, very important to understand them before we really get into engulfing pattern. The thumb rule is that the market has to be clearly definable uptrend or a downtrend, even if the trend is short term. So it really does not matter if it's a short uptrend, okay, but it needs to be in a very clear uptrend before the pattern kind of appears, which is very important. What is the point number two, which Steve has mentioned? Two candlesticks compromise the engulfing pattern. The second real body must engulf the previous real body. It need not engulf the shadows. So what does he say? It need not cover the wicks or the shadows or the tails, whatever word which you are using, but what it should definitely cover is the body of the candle. So the previous candle needs to be completely covered. And the third point, what he very clearly mentions, is that the second real body of engulfing pattern should be the opposite color of the first real body. The exception to this rule is if the first real body of the engulfing pattern is so small that it is almost a doji or is a doji. Thus, after an extended downtrend, a tiny small green real body engulfed by a very large real body could be a bottom reversal. In an uptrend, a small red real body or a black real body enveloped by a very large real red or a black body could be a bearish reversal pattern. Okay, these are very rare phenomena which you wouldn't see, but yes, that is the only exception which we can see. Okay, let me repeat. The exception to this rule is if the first real body of the engulfing pattern is so small that it is almost a doji or a doji. Okay, thus after an extended downtrend, after it moves very much down, a tiny white real body engulfed by a very large white real body could be a bottom reversal. So you see a small green doji which is covered by a large green color candle can be still considered as a bullish engulfing. And in an uptrend, a significant move up, a black real body enveloped by a very large black real body could be a bearish reversal pattern, which can also be considered as a engulfing pattern. That is, you see a small red doji which is covered by a large red doji. Okay, so I can kind of give you a fair example right over here. You can see the body is kind of covered by this thing and then it kind of moves down. That also kind of becomes the top and one more engulfing kind of gets created. These are very kind of rare phenomena. I'm sorry, I'm using a yellow color to highlight. Let me go to red color. Yeah, so these are very rare phenomena, not something which always appears on a uptrend, but when something like that happens, it can still be considered as a engulf. So I hope you understood engulfing here and you understood all the three rules or the three criteria as such. These are very important before you start identifying them on a chart. Some of the factors that would increase the likelihood that an engulfing pattern would be an important reversal indicator would be if the first day of the engulfing pattern had a very small real body and the second day has a very long real body. This would reflect a dissipation of previous trends force than an increase in force beyond the new move. So in the book very clearly he mentions that when you see a large candle covering a small one, so you see that it is a significant uptrend. Price is been moving up, price is moving up, okay, and you kind of see a large candle like a red body completely covering and engulfing. So it opened on top, closed at the bottom, and a clear kind of move where it completely covers the previous day candle, and it is also covered complete candle in terms of a big large candle. Okay, that kind of confirms that the bullish behavior, a bearish engulfing is very strong. Okay, in this situation, this was on Vedanta stock, which we saw this happening on 8th of April, and you can see very clearly the stock kind of moved down. And the second point, which he also talks about the second factor rather he talks about, is that if the engulfing pattern appears after a protracted or a very fast move, a protracted trend increases the chance that the potential buyers are already long. In this instance, there may be less of a supply in new longs in order to keep the market moving up. If a fast move makes the market overextended and vulnerable to profit taking. If there is an initial move and then there is a exaggerated or a protracted move up which kind of comes up and then this appears, it becomes much stronger from a reversal perspective. The third point he mentions is if there is a volume, if there is heavy volume on the second real body of the engulfing pattern, this could be a blow off. Okay, blow off could be a very strong reversal. So I have picked up one more example here, Oro Pharma. We can see this phenomena happened on the 30th of May. You will see a huge volume bar coming up and a strong bullish engulfing coming up, and then the price just continued to move up. Okay, identifying and waiting for these patterns is the biggest challenge. From a trader's perspective, you need to look at multiple charts, or there are certain scanners like charting which can scan these stocks for you. You might have to look and search for a good scanner where there are certain price conditions being put in play, and then you can continue to do that. So we will continue to talk more later when we come to watching candlesticks with a combination of volume, which is at a later part in the upcoming episodes as part of covering Steve's book on Japanese candlesticks. The fourth point is if the second day of the engulfing pattern engulfs more than the real body, right? So as we discussed, if it engulfs more than the real body, so it is just not engulfing, but it engulfs more than the real body, it extends further down, it becomes a very strong pattern. That also means that the first candle becomes a very small candle. You know, all these are engulfing patterns, though not really a downtrend over here, a slight dip, and then a strong candle moving up kind of powers the market very significantly. So these are some of the things which one needs to keep in mind, factors or thumb rules as per Steve, who's written the book, that you see some engulfing patterns which happen over here and the kind of trend changes, but especially the engulfing are very strong when the next day you see a big surge in volume happens and the candle kind of covers. So you'll see a small doji and a doji covered by a green candle, which is also the exception in the rule which we discussed. So there are multiple things which you can see how you can make a observation from a candlestick perspective to take a certain decision from a long or a short perspective, and they've given significant moves over a period of time. So from a day trader's perspective also, these could be probabilities which one can work out really well. If he is able to pick up the hanging man, if he is able to pick up the pin bar, and if he is able to pick up the engulfing, what we have discussed so far, he might get trade opportunities on a daily basis as well. So I've shown you quite a few engulfing patterns as we have walked through, and I've explained to you some of the characteristics he has mentioned. These are the basic stuff which I've explained. I'll try to talk more as we go ahead. Usually the engulfing patterns are the ones which are also very close to the next topic which we will talk about, which is technically known as a dark cloud cover. I think it becomes a great platform for all of us to go back, re-look at some of these charts which you have been trading from a long period of time, and then go back, identify these charting patterns from an engulfing perspective. I hope you got to make notes on the key factors. which are very important from a bullish and bearish engulfing candlestick patterns. Take care, guys. Have a wonderful Sunday.